Good afternoon and welcome to Tax Tip Tuesday. I am your host, Chastity Grady. I am the owner of Grady Tax Plus, where I help service-based providers who are new in their business understand their business structure, their tax situation, and help keep their finances organized. So today we are talking about business structure. Today we're going to talk about business structure. And today's topic for Tax Tip Tuesday is commingling businesses, okay? Commingling businesses. We're going to talk about what does it mean to commingle businesses, why you shouldn't do it, and what to do instead, okay? And if you are new to my live, definitely give me a like this video, share this video out. Share this video out with someone who needs to know about commingling businesses. Maybe you know someone, or maybe you are doing it yourself. But if you know someone who's commingling businesses and want to know more about it, then definitely share this video with them. Okay, so before I get right into commingling businesses, I want to briefly give you an overview of what commingling funds is, because it's a difference. And you may be taken aback by when I say the word commingling businesses, thinking I may mean commingling funds, but I do not. So there's a difference. So for commingling funds, that is when you are mingling your business income and expenses with your personal business, or with your personal account, So commingling your business income and expenses with your personal accounts, okay? So that means that you are receiving your income for your business into your personal account. Your any expenses that you are generating from for your business, you're spending it out of your personal account. So that's commingling funds. Another way you can commingle funds is if you do have a separate business bank account, but you're not using it, okay? Just because you have a separate business bank account, but you don't use it, then that negates the purpose, okay? You want to use your business bank account. So if you have a business bank account and maybe you're using it part-time, and then you're using your personal and receiving income over there sometimes, or having expenditures out of there, then that is still commingling funds. You are still commingling funds, all right? And I did a whole live about commingling funds, the dangers of it, and what you should do instead, and I will drop that live in the comments below once I finish this particular video, okay? So now let's talk specifically about commingling businesses, now that you know what commingling funds is, okay? So commingling businesses is when you are when you have more than one business, okay, and you are mingling it together. You're mingling the businesses together. So whether that's using the same business bank account for all the businesses, in regards to like the expenses, just spending whatever you want out of those accounts as well for all the businesses. And then if you are commingling funds, that's also if you are using your personal account in order to operate multiple businesses too, okay? Because you can have both. You can both commingle funds and commingle businesses, okay? So commingling businesses is when you are operating more than one business. You have more than one business type, okay? More than one business type. And you are using your business bank account or even your personal account to have all of that income and expenses come in and out for all of those different businesses, okay? That's commingling businesses, okay? And so I'm going to talk to you about why you shouldn't do that and what you should do instead, okay? And I'm going to give you a case example from a previous client consult. So for example, let's say that you set up an LLC, and that LLC, I'm just going to give you general examples. That LLC was set up for a food business, okay? You set up this LLC for a food business, and you operate that food business under that LLC. Not only that, you decide that you want to start a new business. And let's say the new business that you wanted to start was in retail, okay? And like I said, these are just general examples. Well, retail is separate. It's a separate business from selling food, okay? Those are two separate business codes, all right? When you file tax returns, when you get an EIN, when you get business bank accounts, you're supposed to provide a business code for that particular business. And you're normally only allowed to provide one business code, right? So if you set up a business for a food industry, and you have the business code for food industry, that means that for that business, everything that's applicable for that code, the business code that you use for the food industry, all the income and expenses should reflect that particular business code when it comes to your tax return, which means that if you were ever to get audited, the IRS wants to know that all the income and expenses that you have, or really the expenses that you have, is ordinary and necessary for that particular business code, right? So if you have a food business and then you later add a retail business, Well, the things in related as it relates to a retail business won't be ordinary and necessary for a food industry. So if you're getting into retail, buying clothes and selling clothes, shoes and other things like that, whatever the retail is, jewelry, whatever it is, that's not ordinary and necessary. The expenses that you accumulate for that is not ordinary and necessary in order for you to have a food business, which is why you should not commingle them, because if you were to get audited, then everything, all the expenditures you have for the retail side will be eliminated. You will not be able to take tax deductions for those, which will in turn lead you to likely having a tax bill. All right. So in regards to commingling, you want to make sure that you are keeping the different types of businesses that you have, keeping them separate. Okay. And I just gave you an example of why, because you have business codes associated with each. Okay. Now let me take that a step further, because I want to dive a little deep into this, because I had one client case where it's really serious, and I don't want someone else to fall victim of this. All right. So for example, this particular client, this is confidential information, so I am generalizing the example. So she does not have a food industry business or anything of the type I'm going to mention here, but this is just for the example. So let's say this client had a food industry business, she was in the food industry, and she operated that business for 5 years, and she also had it taxed as an S corporation, which means that she had her LLC, and she decided to make a special election with the IRS to have it taxed as an S corporation, which will in turn give her a different tax status. So she no longer files a Schedule C, she files an S corporation tax return and attach it to her the schedules that associated with it. Now what happened was that she decided she no longer wanted to be in the food industry anymore, that she wanted to become, let's say, a doctor, for example. She wanted to become a doctor. So what she did was she became a doctor and started a business as a doctor. Again, this is not her, just general. Well, as you know, a doctor is not the same as being in the food industry. So anything that associated with being a doctor, that is not the same as in the food industry, and vice versa, right? But this client felt like, well, because it's me that's operating the food industry, it's me that's being the doctor, and it's my LLC, then I can put whatever I want under that LLC, which is no. But this is what she did. So as a doctor, even though she was taxed as an S corporation for the food industry, she added her income, whatever income she made as being a doctor, she added that to her business bank account for the food industry. And not only that, but any expenses that she had, that also was ran out of the account for the food industry. So when she filed her tax return, she filed with the S corporation tax return as the food industry business code, and had all of her income and expenses as it relates to being a doctor all onto that one tax return. Now, and she also was paying herself a W-2 or paying herself, on payroll, and had a W-2, which is a requirement for S corporation. What dilemma she had was that she wanted to buy a house, and the issue she was having was that she wanted to buy a house, but the income that she was paying herself was low. Well, not necessarily low, but it wasn't as high enough for her in order to get a loan limit that she wanted for a house. So she had to come out more out of pocket. Now, if she had her businesses set up correctly, then she would not have filed her doctor income and expenses along with the food industry that she's no longer a part of. So she felt like because she was no longer a part of the industry anymore, that she could just use that same LLC. The LLC name was very generic, so you wouldn't know if it was a doctor or a food or whatever. You wouldn't know. So she decided to just run that business under there and continue to file her S corporation tax return under that food business code again. Now, when it came to her filing her tax return, so she was paying herself a salary of $75,000 a year, which is not bad. However, she wanted to buy a house, and that income did not allow her to get the income or the loan amount she wanted. And so she wanted to cancel her S corporation because she had a net profit of $125,000. And so when it comes to tax returns, if you are on a Schedule C, you don't have an S corporation tax election, the loan officers will use your net profit as your income validation, as your or income verification. They use your net profit, okay? But if you're paying yourself on a payroll, then you're your employee and your whatever you get salary wise, and that's what they consider. So $75,000 in salary as opposed to $125,000 net profit, that would yield her a higher loan amount, which would give her, less money that she would have to pay out of pocket, right? So the funny thing was that since she never technically said, because she was commingling businesses and she shouldn't have done it. So technically, she never set up a business structure for being a doctor. Okay, technically, she has been operating as a sole proprietor, for that business as being a doctor, and then she still just have her S corporation for the food industry. So two separate entities, two separate businesses, two separate tax returns or schedules, okay? So that actually puts her, now that because she had a consult with me, she wouldn't know what to do at first, but now that she had a consult with me, now she knows what to do, because she hasn't filed her 2021 tax return yet, and she plans to do that on her own, but that's her choice. Now she can go back, or she can divide everything and separate it out, because technically she is a sole proprietor as a doctor, because that entity, that business does not have a legal structure, okay? So now she can file a Schedule C tax return, or she can add the Schedule C tax return for her career as being a doctor. Again, this is just general information. I'm changed the professions to protect the people involved. So now she can file a Schedule C tax return and show that net profit of $125,000 for 2021, and then next year for 2022 she'll be able to file it on Schedule C, and that will give her 2 years, because they require 2 years tax returns claim when it comes to businesses, and that will give her 2 years that she needs in order to qualify for a higher loan amount. Okay, so even though she was commingling her businesses because it was out of convenience and she just didn't know, it actually disadvantaged her. But then because she never set up a separate legal entity for the other business, because there are people who have separate legal entities and they commingle them together, and you shouldn't do that either. But since she did not have a separate legal entity, now she's able to actually claim and file the appropriate tax returns for her sole proprietor, and also obtain a LLC or PLLC if she wants to, and then be able to move on with what she needs to do for getting the house. Okay, so in regards to commingling businesses, again, that's when you have more than one business type. Okay, you're doing two different things, and you're mingling together. Okay, you're running it all under the same business bank account, you're filing it on the same tax return, and you shouldn't do that, because separate businesses have separate business codes. Those business codes let the IRS know what's ordinary and necessary in regards to expenses that's associated with that particular industry business code. Okay, so if you're in the food industry and if you're in the food industry, but you are running your income expenses as a doctor, in this example I gave you, under that business code, then everything associated with being a doctor would be eliminated, okay, if you were to get audited. And not only that, you want to make sure that when it comes to tracking your income and expenses, and let me tell you about the things that you should do instead. So number one, you should separate those businesses. Each business should be operated as if it stands alone. Okay, so what does that mean? So if you want a legal structure attached to it, it has its own separate legal structure. So LLC or nonprofit, if that's your business, whatever your business structure is, you want it to have its separate business entity, legal entities for those particular businesses. In addition to that, you have to have, and you should have, and must have, separate business bank accounts, because you don't want to begin commingling funds, among other things in regards to commingling your businesses. Okay, so separate. So if you have 3 different businesses, then you should have 3 different bank accounts associated with them. Okay, the bank account should be in the business name. So ABC company should have its business bank account, and then XYZ company and 123 company, they each should have their own business bank accounts and not be commingled amongst each other. And a step further, if you are managing your business finances as you should when you're operating a business, you should also have separate business bookkeeping systems or different ways that you are tracking the income and expenses for each of those businesses. Okay, so ABC company needs its own business bookkeeping system. XYZ company needs its own bookkeeping system. 123 company needs its own bookkeeping system. You need 3 each. And this is for when it comes to the tax time. One of the reasons why you need to have everything separated, because when it comes to tax season, you don't want to be stressed out. Okay, you don't want to cause more stress out because you thought it was easier to run multiple businesses under one account. Okay, no, that caused you more stress, because now how are you determining what income was for this particular company, what income was for this particular company, what expenses are associated with those particular companies? They have to be separated out. They have to be managed separately when it comes to business bank accounts and bookkeeping systems. Okay, and that in turn leads to having an easier filing when it comes to tax time, because you can pull the respective reports for each of those businesses. Okay, if you are familiar with a profit and loss statement, which is what you will use for tax returns, they mimic what a Schedule C looks like. They mimic the information that's needed on there comes from the profit and loss statement, as well as if you have an S corporation tax return, information from the profit and loss statement and or balance sheet. And those are things that you get from the bookkeeping software. Okay, that's the most important thing. All right, when it comes to commingling your businesses, you don't want to have it so commingled where you can't. First of all, it shouldn't be commingled at all. But if you are commingling, you want to be able to claim the right business income and expenses for each entity. That's why you have to have it separated out. So if you are someone who needs to separate your businesses out, you need guidance on what you should do, you need help with managing your bookkeeping for your businesses, or if you just have one business, that's fine as well. If you need assistance with understanding how to go about doing all of this, how do you manage your business finances? How do you determine how to categorize your income and expenses appropriately for each business that you have? Okay, and not to confuse having multiple businesses with different streams of income, because a lot of people think that if you have different streams of income, that means you have a different business, and that's not true. If all the different sources of your income, if it's ordinary and necessary and in line with industry standards for that particular business, then that's still a part of that business. But having a food business and being a doctor, those are two separate things, and they don't coexist together. Okay, so you want to make sure that you keep it separated out. So if you're someone who needs help with that and guidance, then definitely schedule a consult with me. I do have my link to my calendar above this video. I also link it down in the comments, along with the live for understanding commingling funds. And also visit my website. I have a lot of information on my website in regards to the types of services and resources that I have for you. And so definitely visit my website, www.gradytaxplus.com. So if you have any questions about commingling businesses, definitely leave me a comment below. If you enjoyed this video, definitely let me know that, as well as share this video out so we can prevent people from commingling their businesses. Okay, we want to prevent people from commingling their businesses. So when it's tax time, that's one less thing that they have to worry about, that they were able to end 2022 going in, having their businesses separated appropriately and managed separately as well. Okay, so let me know if you have any other questions in regards to commingling businesses. And that's it for today's Tax Tip Tuesday, and I will see y'all in the next live.